there's a key aspect that people keep missing. You're going to see people in the comment sections and they'll talk to you about like, just don't trade during high impact news events. And that's something that they teach retail traders. 90% of retail traders lose everything in 6 months. So we want to break that statistic. So let me show you. This is from the June CPI. This is our HINES indicator we offer for free. You can access it on our website. You just have to go into our newsletter. Now look at the bottom. Today is July 11th. But look at how the June CPI is still showing exactly what we were talking about, having these retests, not getting accepted back in to go lower. And instead, now you have a big potential long position. And where you're like, this isn't going to offer anything. I mean, it's almost a 4-to-1, but look at the handles. I mean, look at the points. That's 246 points up. And look at today just as another example. And right here where we're hitting into the CPI high that no one's aware of, this was set back in the middle of June, and now we're in July, and it's still getting absolutely amazing respect. It's just what we wanted to point out, that people think they're telling you just to trade during the highest news event. And we're saying, listen, you can apply our strategy to the news event, but even better, we keep saying you can use it for hours, days, and in this case, weeks later for absolutely amazing retests on all asset classes. And now let's go ahead and look at the strategy so you know how to apply it from the beginning, and then use our indicator for weeks and months ahead for how they can predict the next CPI or the next FOMC, where the resistance, support, and the flipping is. This next candle is going to be the CPI release, and this is a strategy that can help you. There's that candle. You see how it's red and now it flips green? The trick is to be on a 30-minute time frame, and now we're going to set the high and the low of this 30-minute candle. This is right at the release of CPI, and then go from the top to the bottom of this candle, and you're going to find the 50% mark just like that. From here, anytime we close a 30-minute candle below the dotted lines, we're going to look to go to the 50% mark. You close above like that, then we expect to go higher. And the 30-minute candles are the key. Here, you close below the 50% mark, we expect to see the bottom. Close above it, then we're going to go up. And now close below it, we expect to go down. So you just treat it as a range, and this is how New York actually perceives value. And this is super important. If New York breaks above it and backtest it, that's a position to look to long and ride it up high. If it breaks back down inside of it, you short to the 50. Here's a scalper's option where you come back in, you go to the 50, and if you go down and come back in, you go up to the 50. Now let's see what happens when New York actually opens. So New York opens and immediately it's above. So now we're bullish and we're going to look for positions to ride up. And it would look something like this, where you set your stop below the 50% mark and we're going to ride it up as high as it'll go. And as you can see, New York opens, it's above it, and it was a winning trade. Now when it comes back down, it's back testing that candle from CPI. So what do? You can choose to compound, or you can enter for the first time here. You set your stop at the 50% mark. You're still not stopped out. You see the candle still doesn't close below the dotted lines, and just like that, you don't get faked out and price pushes back up. And now this is 2 times that you've won off of this little CPI range. Let the candles go faster, and now watch this candle. You see how it closes below the CPI line? Now we expect lower prices. Watch what happens. And just like that, even a confirmation close underneath it. And now look, we're closing above the 50% mark, which means we expect prices to go higher. And just like that, you see it. Look how we flip the dotted lines back to support. And now you let price run, and you now have another winning opportunity from this style of how to trade CPI with true algo. And there you go. And it runs and never comes back. If you don't have time to do that and you'd rather make a plan the week ahead, here's our true algo swing indicator. It's going to show you where the most probable reversal areas are for the whole week. And now, before price gets there, you can create a plan and react. Here, we hit our weekly, and now we're starting to flip our support box to a full reversal. And now we're going to look to ride this up all the way to the next gray box. These are pre-planned from our indicators. Push back up, and now a winning trade, and you can see we knew where to take profit on that. Now from here, we're starting to see some resistance, but we'd like to make it up, and there it is right there. A nice push all the way back up, pre-planned. We knew these were the areas for reversal, and watch how price reacts to it. If you want to use our magnets and our reversal indicator, come check us out.